Hello, everyone. I wanted to thank you all for joining us. I know that there's going to be more and more people joining us throughout the hour, and it's super exciting for me to be able to host this and have everyone from the Seedcamp community involved, friends, family, extended new potential founders that we might work with, and to share that. I have three great guests on stage, which we'll introduce shortly. And our host for the day is going to be Anisah, and she's going to introduce herself and the format in a second. But first, I wanted to just give a little bit of background about the book and the format for today. So first of all, the book was written originally in 2015. Seedcamp started in 2007. And over that time frame, we started seeing a pattern of issues pop up. And those issues were the foundation of what the book is basically anchored around, whether it be some of the issues that were emotional or some of the issues that were technical. I started drafting some of these articles, which were on my blog, thedrawingboard.me, and then I eventually migrated it to Medium. But those blog posts became the foundation for the book, which I published in 2015. One of our companies that we backed, Reedsy, was looking for people to write books as part of their emerging platform. And I decided to be the guinea pig. It was the very first book that Reedsy published in 2015. And I've been super proud to not only back the Reedsy marketplace, which has been amazing to see grow, but also just have been, part of their growth journey. So the book obviously started showing some signs of age. I will talk a little bit about round inflation and all these other things. So I started feeling the pain in 2020 of the embarrassment of any author where you're like, oof, I probably need to change some elements of the book. So I decided to do a complete rewrite and left only the sections that I thought were still relevant. And so, so that was the launch of the book, and that's why I started it. And in the spirit of the original book, I did a couple of things. One of the things is that I continued to support the charity that I felt really resonated with the cause of the book as well. Resurgo Spear is a coaching and mentoring program for disadvantaged young people who are trying to get a leg up in a career. And it supports a lot of the local community in the UK. And I just felt that it really resonated with what I wanted to support as a cause. So I wanted to thank them for the work they do. And if you've bought the book, feel free to make a donation. And if you've made a donation to get the book, hey, thanks for that. The next thing I wanted to also thank Silicon Valley Bank and Cedars, both of which have been super supportive in this. They've helped print some of the books. And as you probably have seen, there's a chapter on crowdfunding that came through the work Cedars did and some of the data that they have that they shared with me. So a very big thank you to them. So maybe this is a good point to talk a little bit about the flow before I hand it over to Anisah. So the flow of the book is built around some of the themes that we have seen over the years that really can skew a founder to be successful in a raise or not. The first one is the mindset. Seedcamp has raised 5 funds, and in those 5 funds, I've learned personally some of the challenges that come with being rejected time and time again. It's painful, it's emotional, and it's like somebody telling your baby's ugly. It hurts. And so getting to terms with that is part of that first part, is understanding what that means and how to be systematic about it, how to deal with it in a systematic way, how to leverage that for your advantage. The second one is the process. Fundraising is a process like anything else. If you put your mind to it and you go through the motions, you can get to a successful conclusion. But you do need to have some discipline around it so it can help you stack and rank your options and then know when a decision is ready to be made. And then the last part of it is the technicalities. Now, this is where you don't necessarily succeed in fundraising because of the technicalities, but you can have a lot of pain because of poorly managed technicalities. And we have with us, Sia and Tom. Tom is a lawyer by training, and so hopefully he'll be able to share some anecdotes as well about some of the worst case scenarios and some of the technicalities like stacked convertible notes and all that kind of fun stuff we cover in the book under a section called Toxic Rounds. So that's the flow of the book. And so with that, I'm going to hand it over to Anisah to introduce herself and chat a little bit about her background. And she's both a founder and she's also a contributing author for Sifted and editor. And so it'd be great to hand it over to you, Anisah, and introduce Tom and Sia thereafter. And then, let's get started. Thanks.
Amazing. Thank you so much, Carlos. Hi, everyone. So I'm Anisah Osman Britton. As Carlos said, I wear multiple hats. So I work for Sifted as a startup life reporter, where we curate a newsletter every week for the operators, the people behind the flashy headlines of unicorn statuses and big valuations. And one of the things I do there is I review books, especially books with European authors or European focus, which is why I got involved today. In my day job, I'm the CTO of a secondhand fashion company called Vinokilo, as well as running a coding school for women called 23 Code Street out of London, which is where I am today after a really long time out of the country. It's so nice to be back. So today, I really just wanted to talk to Carlos about why he started to write the book, and we'll get into that afterwards, but also more questions from the founder side, like why does some of this work like this? How do we get it across the line? And how does it differ across sort of borders in terms of legalities and policy, and maybe some of the nightmare stories that we hear and how to avoid them? But before we get into that, Tom, could I get you to introduce yourself?
Absolutely. No, very, very happy to, and great to be here. So I'm Tom Wilson. I'm a partner at Seedcamp alongside Carlos and Sia. So yeah, I've been with Seedcamp for coming up to 7 years. So joined in 2014. And as Carlos mentioned at the start of in the intro there, I actually started off life as a lawyer. So both Carlos and I actually have done some content together before on some of the kind of like technicalities and some of the legal terms and points which come up with when structuring fundraising in particular. So looking forward to diving in on that. And yeah, no, it's great to be here. I mean, I think most of the stuff I learned about VC fundraising and financing was from Carlos. So it's strange to be an expert on his panel, but I'll take it. So yeah, looking forward to the conversation.
Thanks so much, Tom. And Sia?
Hey everyone, so I'm also a partner at Seedcamp alongside Tom, Carlos, and Reshma. I also joined approximately 7-8 years ago now, initially through an internship, and that was back when Seedcamp was just a very small organization of 4 people, and I had the chance to join the partnership with the launch of the fourth fund in late 2017. I've been also working closely with our founders as well as part of like the kind of like base camp we run, which are like the onboarding sessions we run around like kind of leading some of the sessions we do there around the topic of fundraising. And yeah, so excited to share a bit what I've also learned mostly through Carlos and Reshma about that topic, and also through like all the founders that we had the chance to work with over the past 7-8 years.
Amazing. Thank you so much. So for everyone who is here, please do ask questions in the chat. We are going to be checking them regularly. I don't want this to just be us talking. It's you that we are here for, and we want to cover what you want to know. But I will kick it off. So one of the things that we always talk about when we talk about fundraising is when to start, and how do you know that you are ready to start fundraising? And I guess what we're talking about here is, 1, maybe the mindset of it, 2, where you are in terms of your financial state as a company, and 3, where you want to get to. So I want to start with the mindset. When you are starting to prepare to fundraise, and I know we're diving straight into it here, where do you think you should be mentally in terms of what you're ready to go into? What should you be expecting? And how should you be preparing to deal with rejection, which I think is a big question that Carlos talks about in the book.
All right, well, I'll take a stab at it and then maybe hand it to Tom and Sia to give their thoughts. But so the audience in this event is going to be probably pretty broad. There's probably some tech co-founders and founders, and then there's going to be people who are making cash flow businesses. And the things that you have to remember is that the moment you go fundraising, you're taking somebody else's money. And that brings with it, no matter how light or how heavy, it brings with an expectation that money is going to be returned in some capacity. So I think the first thing you have to be comfortable with is that you're going to have somebody else involved in your company. Now, in a very light way, sometimes that can be a simple call here and there, and in some cases, none at all. But generally speaking, the first thing is that you have to be ready that this is no longer just about you. It's about other people that you now need to make a promise to. Like, even if it's a light promise, even if it's like not a promise on return, rather like a form of implied commitment, part of the mindset is this is no longer about you. This is now involving other people, their money and their expectations, and you have to manage that. So that's the first part of it. The second part of it is you need to have a vision for how to take care of those shareholders. Like what is the ambition there? Like what's the point of bringing that money in? It's not just for you to just, leverage for your benefit. It's also, you're taking people on a journey, and it's not about there's not a right or wrong journey. You just have to be clear what that is, because that's part of what you're going to be presenting to other parties. And then the last point around that is get ready for people not necessarily always getting it on the first go. Like part of the book talks about is how to refine that, but part of it, rejection sometimes comes because you haven't fully grasped how to tell that story. But maybe Sia, I know that you have worked with some companies that are increasingly emerging in, let's say, very interesting areas like NFT and how founders manage everything from that to like of interior, which is furnishings. And so maybe like how those stories there that you think about how they approached fundraising from a mindset point of view.
Yeah, I think it's important to start like the active process of fundraising when you have a certain level of clarity around like the core narrative around your business, because you are going to get challenged on pretty much every single aspect of like the company you're building. And so you want to like very much like show that you have like this like a very like strong, deep feeling of confidence that actually you're going to make it work, and that you thought about a lot of like those like common questions that investors will like challenge you on. And obviously, I mean, Carlos, you were referring to, companies like Vintorier that are like just like a vintage furniture marketplace, to a company in a much more emerging space like So Rare, which is a NFT meets like fantasy football platform. I mean, the way like you're going to build that narrative is going to be pretty different, and sometimes it's about like showing like why like there is like in what is already a pretty established space an opportunity for you to do things slightly differently, and like why your approach is differentiated and is like timed well based on where the market is. And sometimes you need like before getting into that even to like educate a bit your investor about the space, because a lot of like the early stage investors will be generalists who won't be like experts about like the specific category you're going after. So I think you should like always as a founder remember that you are the expert in the room at the end of the day, and it's about like making sure that the investor you're chatting with like first like understand like what you're going after, the opportunity, the market you play in, and that then obviously they also like get excited about your narrative about why like you're going to win. So I think that's very much like the way I would think about it.
And Sia, I just want to, sorry, Tom, I'll come to you in a second. Before you're ready. Sia, I wanted to come back to you on your point about narrative and crafting it for your investors, but maybe taking a step back, can you talk to us about how you craft that story internally, knowing that your founder is going to spend so much time going out and raising money? How do you tell that story inside and get your team on board?
Yeah, I think it's important that you just flag to your team also what are the implications of getting into that active fundraising process, because it's going to be extremely time consuming for at least the CEO, and often also for all the co-founders who need to be looped in like the final stages of fundraising process. And so I think it's about just really rallying the troops around the fact that this is like exciting endeavor, and that it could like really accelerate like your like just like plans and your chances to like deliver on what you've set yourself for, but that also there is no guarantee of success. And I think the way you communicate that in the very early days to your team might be very different from like the way you approach it at Series A, Series B, and beyond. But I think in the early days, it's important that across like that team of 5, 6, 10 people you have, that there is somehow alignment about the risks there, and also the massive opportunity that this raise might bring to the business.
Thank you. I want to ask one last question on mindset before we move on, because there is so much I want to cover with you all. I mean, it's so great that we've got so much like expertise in one room. So my question is, with rejection that is happening, obviously across the board, when it comes to fundraising, I mean, I'm sure one of you has the stats on how many you say no to every single week. How do we support founders in that process? I know that Spill, which is the Slack mental health tool, is working quite a lot with founders. Sanctus talks a lot with founders in their coaching kind of situations. How do you as VCs ensure that the founder's mental health is protected, and what do you advise going through so much rejection?
Yeah, I mean, I'm happy to kind of like input a little bit on the kind of the process, I suppose, which goes along with fundraising and some of the associated rejection, because, you know, I'd almost encourage founders to look a little bit beyond the headlines sometimes. I think it's very easy to, you know, kind of like go to TechCrunch, go to Sifted, go to whatever the resource you're using to get your technology news and see like splashy headlines everywhere about, you know, so-and-so company has raised huge round in a very short period of time, and then almost like project and compare yourself to those companies. But there's always a story behind every single fundraise. And I think every single fundraise, there are ups and downs and there are challenges. And so I would encourage founders not to try and kind of compare so much to even peers who may even be in the same sector. Because it's very much like, you know, this is the definition of a marathon and not a sprint, I think, building a company. And fundraising is just one step along the journey. You know, it's not the kind of be all and end all. It's not success. It is an important thing, I think, an incredibly important milestone, as Sia talked about, to potentially, you know, show progress and show something to the rest of your team, which is something that as a CEO and a founder, you probably feel a lot of responsibility for. But I would just say that, you know, we've seen companies which have had very challenging fundraisers for one round, then have incredibly quick and incredibly fast fundraisers, you know, with multiple offers the next round. So I would just try not to, you know, compare yourself too much to those other peers, and to kind of focus on the end goal and the fantastic company which you can build.
And I think the thing I would add to Tom is find yourself a network to be part of. You know, there's a lot of networks out there like the ICE network, and there's founder communities in local areas that can be helpful, because sometimes it's just other people to talk to. You know, everybody who's fundraised before is going to have a story that they can then share with you, and can listen to you and maybe even help you strategize. So don't go at it alone.
Yeah, that's great advice. And I think especially if we're looking at the European hubs, there are now Slack groups where founders are raising. There are places like Landscape VC where you can talk anonymously if you want to share maybe less fun stories and less positive stories. So that's really, really great as well. I did check, and Seedcamp is rated very highly on Landscape before this talk, so I'm very happy to mention it out loud. So now that we know that we want to raise money, we want to kind of strategize how we're going into this process to be efficient with our time, to be efficient with who we're meeting, and so on and so forth. So I want to start with the first question, which is, who should you be raising from? Very open question.
So the fun part of this conversation is that it's that it depends, right? Like it's so tricky to answer that like comprehensively with one answer, because it depends on geography, it depends on sector, it depends on stage. But I'll hand that to Sia, since he one of the first things Sia helped us with when he first joined Seedcamp was helping organize our understanding of the European ecosystem, and now he's like the guru of it. So maybe Sia, you can help maybe answer that.
Yeah, I think that the great thing in 2021 in Europe is that you have so many more options that you had, like, 3, 4, 5 years ago. And so you now have a lot of angels in most key European hubs that are actively investing. And so you'll be surprised actually how with angels, it's kind of often quite easy to reach out over LinkedIn. And I'm not saying you're going to have 80% or 100% conversion rate, but if you manage to have a nice snappy message of outreach there, you can actually go pretty far with just targeting angels who might have invested in like the vertical you're building, or who, because of like their day job, might have a strong interest for like what you're going after. So I think that's definitely one type of investor to explore. You would then have also funds like Seedcamp that are active for like that first round of funding. And I think what we've seen over the past year is that increasingly all like the institutional firms are going earlier and earlier. So, you know, your typical Series A fund will go and invest in what are like large seed rounds because they feel the pressure of the late stage guys competing with them at the Series A stage. And that means that even at the seed stage, you see some of the folks that were very much specialized in investing only in like those like 2 to 3 million euro round and like leading those rounds, that are now also comfortable, maybe through a side pocket of their fund, to invest, you know, 250K, 500K check in like sub 1 million round. So I think it's just kind of sometimes challenging to like find like the right path across like all that noise, because like you will see something on the website of like the VC fund you're checking, but then if you go on like Crunchbase, you will see that they participated maybe in like earlier stage or later stage rounds. So I think it's a bit of a discovery process, and you will probably like end up like also having some like exchanges over email with folks that are not specifically a fit for like what you're building at that stage. But at the end, it's about like building relationships and just trying to find a path to like get that first round together. And hopefully if you get the right people in that initial round of funding, those folks will also help you then with your next round of funding, and they will also facilitate ahead of your active fundraising introductions to, you know, the partners and like also relevant angels that could come in your seed or Series A.
Yeah.
Oh, go on.
I could just build a little bit on that one, and I think that, you know, I think Sia makes great points there about kind of like how you start to think about who the right people are to reach out to, and I think once you've done that first step and you've started to identify like the types of investors who might be a fit, I think it is important as well to try where possible, and particularly once you've already met those funds or you've started to build a bit of a relationship there, to try and see, you know, beyond just the brand and into the kind of the individuals who you might be working with, the people who might be spending even more time with you as a founder, because maybe they're doing things like joining your board or being heavily involved. And you can, you know, I guess on a couple of factors, it can be quite, you know, like very, very appealing or intoxicating, the brand of a certain fund, which might bring to the table. But, you know, looking beyond that, looking to the individual who you might be working with, and then seeing what their, you know, maybe their experiences and maybe their involvement with companies in similar sectors, or what they can bring to the table, can be another factor to consider. And then also, probably the only other thing is, I definitely touched upon this point, is this idea of, you know, the stages which different funds invest. So if you're going, you know, if you're talking about funds and you're talking about kind of those who, if you're in a fortunate position where you do have options, looking at specific funds who focus on different stages can be a really good way of thinking about it, because it means that you'll get kind of experts for that level, because there definitely are, you know, funds who specialize and do a fantastic job at certain levels, and then maybe have kind of been extended to other stages as well. And all those little things aren't necessarily clearly available to founders when they just, you know, see a fund or see a brand or see companies they've worked with. But understanding, maybe if you're a founder, asking questions like, okay, when did you start working with that company? You know, what stage did you invest with them? Or like, how did you help? Who are you involved with? Are all questions that can help you kind of understand more about what it might be like to work with them as a fund.
So many things to pick up on there from what you both said. So we'll work backwards. So the first one is it just as easy as asking? Can you just say, hey, who have you worked with? Will you introduce me?
Yeah, I think absolutely. I think it's like anything, isn't it? I think, you know, if you don't ask, you don't get. Or in Newcastle, of course, they say shy bands getting out, but I need to translate that. No one
That's the first time I've heard a Newcastle expression, Tom.
So I think, you know, there's no harm in asking. I think that, you know, it's such a, like, it's not the most transparent industry, right? I think Carlos's book does a fantastic job at like highlighting kind of like things which we take for granted because being fortunate to be in it, but founders should be more armed with going into those conversations. And I think definitely, you know, much in the same way that those funds are going to do a lot of due diligence on you as a founder to decide what they're going to invest, you should equally be doing due diligence on them. So you should be asking, okay, can you introduce me to portfolio founders you worked with before? Maybe can you introduce me to a couple, and maybe one which maybe didn't even work out, or something like that, just so they can get more of a sense. I mean, this is a very long-term relationship which founders are going into. You know, it's very, very difficult, maybe listen to the technicalities, to remove an investor. It's nigh on impossible. And so taking that time and asking those questions, I think, is not only reasonable, I think it's the right thing to do.
I want to emphasize something you said then for all the early stage founders who are here, which is ask for the ones that you didn't invest in or the ones that didn't work out. Some of the best conversations I've ever had about VCs has been with people who haven't been invested in, both good and bad conversations. And I think that those learnings are super valuable. Going back, you said, find out what stages VCs invest in and what sort of areas and industries. Where do you find that? How do you find that information out? Is there a long list?
Yeah.
Should we be looking at Notion?
So there are lists, but just to first jump back quickly on what you just said, Anisah, I think it's about also making sure you ask those questions at the right time in your conversation with the VC, because at the end, you know, it's about building just any human to human relationship, just an emotional connection with the person who is on the other side. And obviously it became even more difficult over the past 12, 18 months as everything happens on Zoom calls. But I would say, don't after your first 20-minute chat with an investor, ask him to make 5, introductions to portfolio companies, including 3 with who it didn't work out. I think there is a right time to do that. And I mean, pretty much every founder nowadays that we make an offer to would ask us at that point, hey, can you also please put me in touch with, 2 or 3 founders you worked in the past, and ideally one maybe that is from my sector, another one that maybe didn't work out, etc. So you can definitely make those asks, but make sure to time them well. And then to go back to your actual question, which was around how you find all that information. I mean, I think there are lists there, but at the end, you need to take a pretty systematic approach to how you are gathering this information. And that will just involve some research. And that's where, Crunchbase, for angels, sometimes, even if it's slightly less kind of popular in Europe than in the US, I think AngelList can also help you. But Crunchbase, AngelList, LinkedIn, and obviously the actual website of those VC firms will be your best friend as part of that kind of information gathering phase. And then try, as we were mentioning before, hopefully you can be part of network of founders that maybe have been there or are currently raising or so, and try to just gather information, exchange with your peers, and that you can, even on the first round of funding, already strategize a bit around who you should prioritize. And I think the information you're gathering at the end is not only about the stage and the sector, but also about the person and that specific person in the fund, what are maybe the areas he's interested in. And that's where even checking his social media channels and if he's blogging or anything else might be also relevant. And as you start to build a relationship with those investors, just show that you've done your research and that you come also well prepared in knowing what they might find interesting, what you might not agree with them, and that could be a source of interesting conversation, etc. But there's not, unfortunately, one place where you have all that information that is up to date, because the challenge is that even ourselves, having tried to build something like that for our portfolio, and other people have tried to kind of open source it, the information gets outdated so quickly that it's a bit challenging to always stay on top of it.
Yeah, no, that's fair. And Carlos, you write a lot about this in the field guide about building the relationships. And one of the bits I actually really loved about it was you talked amazingly about building the relationship, but you also talked about building it as a sales pipeline. Could you talk a bit about that sales pipeline and how you imagine that being structured?
Yeah, so there's a a blog post where you can download an Excel sheet or Google sheet to help structure it. But basically, the idea is relatively simple. In order for you not to go crazy with like the workflow required to fundraise, and assuming that you won't get all the money you want on the first conversation, or that the very first conversation you have is the one you want to actually have investment from, you're going to have a way of keeping track of the conversations. And what you're going to want to track is, who you met, where they are in the organization, because it matters for later down the road, like what's the next meeting and who is it, partner, is it not? And then it's going to be like elements about fit, like does this person know the sector, do they not? Can they lead the round? Are they part of a syndicate? Are they only going to be able to follow? What is their average check size? And so you start getting a feeling of the first meeting and subsequent meetings with that person. Then you will also have next steps. So sometimes it's not unusual after a first meeting that there's a next step. It might be like, you need to send some details. So it becomes a way of like keeping track of every single meeting you've had, where you sit in their process, who's the lead for that, what is the round commitment that they could potentially do. If not, then you still have to continue looking for a lead investor. What probability you assign it so that you can have a general sense of where you're tracking on the total round size, and then making sure that you don't forget what next steps you promised you would do. And so that's why, sales pipelines aren't that different. It's just slightly different outcome, which is to sell something. In this case, you're selling yourself, in equity in your business. So I guess it is a sales pipeline in that sense. But it just helps you keep track of what Sia was mentioning with, you're researching a fund. And so you might have emailed out to your friends, can anybody make an intro? And so for when Seedcamp was fundraising, just I'll give you a sort of firsthand of what we did, because Seedcamp is a fund and it has to raise money just like founders raise money. So we use Streak. It's a tool that it works on Gmail, and we've created a pipeline, and it starts with people we want to meet to reach out, which is the team member that has that relationship, and then next steps pending. And so, we follow that process, and we move from like reached out, inbound received, in conversations, committed, and then, it's the same thing for founder.
Did you want to add something to that, Tom?
I mean, the only thing I'd add is like, I think it's almost kind of a cross between mentality and process, and I know we're kind of crossing between them too, because I think all those, like the way of structuring things is so important. And I do think that, when I speak to founders, and particularly when people are kind of gearing up for that process and they're getting ready and they've got their list and they've got like, 30 names to speak to or something. And again, about setting that kind of mindset is this idea that, every conversation which you have has the potential to bring value to the company in some way. Because even if it's a no, which a lot of them are going to be, it builds another node, another network, another person, someone else that you can impress, and you can potentially, even connect with them in the future. There's loads of examples of funds where it didn't make a sense at one time, but then it does in the future. So I would just, on that kind of mapping, that relationship piece, it's not just a kind of one-time thing. If you do it really well, like Carlos's funnel, I think is a really good way of structuring it. That forms a CRM of people for the next time. And, if they come back and they say, look, we love it, we think you're fantastic, but we'd just like to see this, this, and this, make a note of what this, and this was, so that in 9 months' time, or whenever you go out again to have that conversation, or keep in touch with them, you can go back and you can say, look, you said it was this, this, and this. Well, we've done that, and we've done this other thing as well. And it's just a really nice way to continue to kind of keep kind of fundraising always a little bit easier to start again, because you're not starting from a cold start. So I think that kind of continuous relationship mapping and building is quite a nice way to frame it and think about it.
That actually segues so nicely into my next question. Beautifully done. So one of the things, I've been living in Germany, not in Berlin, for the last year, and the conversations that happen there in the VC world are very different to some of the conversations here, and also how the process is kind of rolled out. So I had a few questions around those cultural differences and legal differences. So the first one being, it sounds like when you're raising money, it's a huge relationship, organizational process. A lot of startups in Germany hire someone specifically for that role. It's not the CEO, it's not the founder. What is your opinion on this?
I mean, we have pretty strong opinion about that. We believe that as a founder, there will be no one else that is like better, to just like share that compelling narrative about why the business you're building is exciting. And yeah, as a CEO, I think that's like one of like your core responsibilities. So it's obviously at that early stage. I mean, if you are speaking about a Series D or E and you have like also an investment bank helping you, I mean, that might be a different story. But at seed, pre-seed, Series A, I mean, for us, it's already kind of like a flag if it's a advisor or like a fundraiser, or even if it's a founder leading that fundraising process. It's usually that, there's something going on there that is maybe not exactly like what we believe is best practice.
Anisah, I wanted to comment on that because one of the challenges that I had in writing the book was stating our preference, stating what we believe is the right thing versus like finding a more universal truth. And so the way that I boiled it down was saying there is no one consistent truth. There are ones that we like and that are particular certain geographies. So that puts a certain pressure on the founder to realize that you're going to have to adapt your strategy of how you communicate to whom you're talking to. And I'll give you a couple of anecdotes on that. We had some founders, some European founders that were, we have a trip we call as a US trip. Tom and Sia have been the organizers of the US trip for the last few years. And, it's a great experience because the founders get to meet a lot of the best investors in East and West Europe. And we're kind of smiling because we've had to cancel it, obviously, for the last year and a half. So it's been easier to do on Zoom than it was ever in person. But one of the cool things about it was that you literally got in a week and a half to see how much different investors thought differently about how you tell your story from East Coast to West Coast. So in the book, I talk about how some local European angel investors sometimes want to know how you're going to make money, like within a year or within 6 months. Whereas when we're in Silicon Valley, some of the funds that were like 500 million fund size, they were interested in how you were going to be $1 billion company because that's the only way that they were ever going to make money. And they saw these incremental sort of revenue generation attempts as sometimes a distraction if they weren't like lining up to the bigger picture. And so as a founder, you're confused because you're talking to two very smart people who could potentially give you money. Which one is the right one? Well, the answer is neither of them is right. Neither of them is wrong. Your job as a founder is understanding who you're talking to and crafting your message in a way that is relevant for that group. If you're talking to like an angel in Europe who is perhaps from like a private equity background and they're going to be your first angel check, you might have to talk about like how you're going to trial the monetization sooner rather than later. And then if you're talking to like a large fund in the US, you're going to probably have to speak and tell a story that's relevant for their fund size.
And you say really clearly in the book that even if you're changing what you say, you're never changing your core mission. And I think that emphasis is really important. Maybe you should say that in your own words, Carlos, so I don't put words into your mouth.
Yeah, so maybe I'll hand it over to Tom to share a little bit. Tom and I got to work with Johnny, the founder of Hopin, the platform that you guys are in at the moment. I think Johnny might actually be on this. I'm not really sure. But, from the day one, and then I'll let you tell the full story, Tom, but from day one, he was always very passionate about why he wanted to build Hopin. And that hasn't changed. To Tom, maybe you want to fill in the gaps as to like early days and sort of his physiological background that led to him creating Hopin, and then sort of how that ambition has been consistent.
Yeah, no, I think Carlos is probably getting to this point of kind of mission-driven founders and people who really have a huge passion for what they're building, and how that's kind of the most infectious thing and probably one of the most compelling things I think you can have is that connection. And Johnny had that in spades, I think, as a founder. He was both a very, very excellent presenter, but also had a true belief that what he was doing was incredibly needed. And also he had a very, very personal connection to it because he couldn't go to those events for a period of time. So then he built a product and a platform which allowed people to host those kind of events virtually. And that was incredibly compelling. And, obviously the rest is history. And I think he's a fantastic fundraiser, still leveraging some of that story to this day. But I think to come back a little bit on that point as well, I think if you think about the advisors who I know we spoke about as the question initially, is they're never gonna have that connection. They're always going to be at least 1 or 2 steps removed. They're never going to have that like ability to be able to look at someone who they're going to potentially raise money from in the eye as a founder, much like Johnny did, or other founders who we've had the fortune to back, and have that connection and really, really say, this is why I'm building this business, and this is why I'm incredibly passionate about it. This is why I'm going to, go through all the downs to hopefully get to the up, and eventually return you money and be really successful for you as an investor. So I do think that, like Sia was saying before, you miss a trick if you have an advisor or an external person doing that. And also, they target the wrong people. I mean, you just have to look at, I think, anyone's inbox in this industry, and we get a lot of random emails from advisors who are, completely barking up the wrong tree in terms of sector and stage, because they've probably just, gone out to everyone. So I think that, as a founder, taking control of that, it's incredibly time consuming, and it can be painful, and it can be really challenging. And, I think that I've got so much respect and admiration for founders going on that journey, but I think it is a really good use of time, because it increases the likelihood of success, and it goes to the point we were talking about before, of like building a relationship, building network, and potentially in those situations where it is a no, getting some, hopefully occasionally some useful feedback, which can maybe help kind of like, point in a direction in the future, which is even more successful.
Anisah, if I can add something to this point, because a question just popped up in the chat, which seems relevant to this whole question about whether it should be a founder-led fundraise or not, or supplemented or whatever. The question is from Deval. It says, I have often heard founders have discovered a lack of leadership across their business upon return from a fundraise, leading to cultural problems. I'm paraphrasing his question. I think that's how he meant it. Do you recognize this as an experience? I think there's a couple of things to unpack there, Deval. First of all, because a founder leads a fundraise doesn't mean that a founder should not be involved in the business. It's not like you've shifted entirely to just fundraising and therefore have let go of the reins. Can it be a distraction from their day-to-day activity? For sure. When Seedcamp's fundraising, when other funds are raising, it is part of your day. You have to focus on it. The best thing you can do is dedicate some time to it in the day, ring fence it as best you can, dedicate some time to it, and then focus on other things. You definitely don't want to have sort of succeeded on one end, the fundraise, and then you find yourself with a disaster on the other end, which is a cultural or leadership crisis in the company.
Thank you. I was just reading the other question underneath it and I got distracted. Sophia says bottom up and top down. Sophia, do you want to clarify what that means? And then I'll ask it in a second.
So Sophia is one of our founders, by the way. She runs Cup Club. Yeah, she's the founder of Cup Club. We're a big fan of hers. She's also a big fan of my dad's, who's also on this call. So it's just funny. So I'm waiting to see what she asks.
An excellent company. I'm also a big fan of Cup Club. Waiting to see more of it around Germany soon. Fingers crossed.
So the next question is, it seems, well, you sorry, I took over there, Anisah.
We're going to hold that one for a second,
okay,
because I want to go back to European sort of intricacies and differences. And maybe, Tom, this one is definitely for you. It's a legal question. Carlos talks about SEIS and other ways of maybe tax efficient ways of investing. The pandemic has really opened up how we can connect with people and who we speak to and access to people. How does that actually technically work if you want to fundraise from investors around Europe? Is it possible? What are we actually seeing is different, and are people really being able to fundraise?
Yeah, no, it's a great question. I think that it's almost like kind of fundraising throughout Europe, fundraising more globally is definitely a trend that we've seen over the years, and I think it has been probably accelerated a little bit by the pandemic and by particularly pan-European, definitely, but also increasingly with US funds investing both in the UK but also Europe-wide. So I think that as a macro trend, and that's not because of the legal way of investing in those companies has got easier. It's just because I think investors, two things. One, have woken up to the fact that global businesses are being built in Europe, and there's countless examples of that, and that's definitely been in the DNA of what Seedcamp was set up to show, and we're now seeing more and more proof points around that. And I think other international capital is waking up to that fact and wants to invest here. And then the second one is obviously the pandemic has meant that travel has almost been kind of because it's been possible, so it's been democratized access everywhere because everyone's on Zoom. So it's like if you're on Zoom, you're investing in California, is it the same if you're on Zoom and you're investing in Europe? So I think that those two things are increasing kind of international access to capital, which is overall great. And I think that in terms of how you structure those on a like deal by deal basis, of course there are like idiosyncrasies across different jurisdictions. I think you mentioned, Anisah, about Germany and some of the processes which they have in place versus the UK, versus like Southern Europe. There are always going to be kind of nuances, but I think that those areas are becoming more sophisticated and they're becoming more accustomed to how important it is to have like a very, as far as possible anyway, quite like a lightweight form of documentation for this stage of investment. By this stage of investment, I mean, early stage, so kind of up to £1 million kind of pre-seed funding rounds. And most now, I'd say startup ecosystems have their own version of something there which will work. And also a lot of founders think about, is it right that I raise and structure my financing round in the ecosystem I am, or shall I use, another law, whether that's, English law established in the UK, because it's a very, it's probably still, and I think that the stats would back this up, the most kind of like buoyant fundraising in Europe environment. There's the most capital here. So setting up your business here might be, in the interest of the company. And there's obviously benefits also on the SEIS and tax front from a funds which are structured that way, but also an angel point of view. So that's something to consider if you're based elsewhere. Or if you are in a, also already kind of vibrant like local ecosystem, there are fantastic advisors and lawyers who are sophisticated and raising rounds of financing and helping with that. So whether that's in Germany, whether that's in Lisbon, whether that's in, other areas in France, around Europe. So there's the kind of technicality of how you structure it should never get in the way, is what I'm saying. I think that there will always be a way to do that. It's just about speaking to your investors, because now investors, there's more appetite for it, and they're more willing to allow companies to stay a little bit where they are, rather than back in the day, a few years ago, if you're raising money from Europe, or if you're raising money particularly from US investors, there was always you need to flip this business and establish this business in the US before we'll put money in. I think now there's more willingness to invest earlier, and then speak with them to get recommendations for good advisors to help in your local jurisdiction, or like some of the methods we've talked about before, whether that's joining interesting kind of groups of founders and getting recommendations that way, or like kind of like obviously researching who's been doing deals recently, because it shouldn't ever stop you from fundraising. Just there is always going to be a way to get it done.
So I just wanted to quickly make a couple of comments to the audience. If you can put all your questions in the chat that says chat. Well, we're going to try to address all the questions, but I realized that we left all the sections open and now we have questions and Q&A and people and stuff. So I think we had some questions about some of the stuff that you were talking about, Tom, about like the ASA, is it appreciated in Europe versus other structures? I think maybe just to quickly touch on that and some of the questions around valuation. First of all, we do cover some of this in the book. So if you want to like read more about valuation and all that, we can talk about it. But I think the topic of which structures are taken where, I mean, generally speaking now, if you are, and this is a generalization that we've seen be true more and more, if you're a company that is really growing fast and really doing really well, you can pretty much set not only the terms, but you can also set the jurisdiction and structure quite easily in a way that you can't. So I think it really depends on where you are. We've seen more and more US investors willing to invest in companies all over Europe without asking for a legal change or a different structure. So I think it's unfortunately part of how hot your round is will determine how much people are willing to like deal with the difficulties of a local jurisdiction. I know that German companies require a lot of notarization and a lot of other technicalities to happen, but don't let that hinder you. Like that's not a reason to raise. That's not a reason to set up your company and deal with those. Just deal with those things when they come up. If you have the right investors, they'll find a way.
I think as we have less than 10 minutes, we should go through the audience Q&A, although I would love to ask so many more. I have so many that I'd love to hear from you guys. Sophia, you said it differently to me earlier, Carlos. I want to make sure I'm pronouncing it correctly. Sophia, is that correct?
Safia.
Safia, great. Ask the question around narrative. So if you are pitching to EU VCs, so European VCs, should you build the story of bottom up? So how you're going to get to $1 million, for example, and for the US VCs, should you be saying how you're going to get to 100 million, for example? Are you telling shorter stories at each one is what I think the question is. Are you doing step by step?
Yeah, Sia, do you want to take that one?
Yeah, sure. I think, to be honest, that also in terms of like just investors' mindset, etc., there are less and less differences between European and US investors. You will find both in Europe and in the US, maybe angels that come from like different background, might come like from traditional finance, etc., who might be much more like, metric driven, and they want to understand how over the next like 6-12 months you're going to use that money and manage to like hit a few key milestones that then like are potentially like going to trigger more funding. But I would not say that you need to like fundamentally change like the way you like just build your narrative for European VCs versus US ones. I think that's not anymore true. That said, I mean, I think it's just like about like when you build that narrative, being able to incorporate in the story like the kind of like different time scales, so like what is going to happen over the next month, literally, when the money hits your account, what's going to happen over like the timeline you've raised for. So if you raised a pre-seed for 12 months, like what are the key milestones you want to unlock over those 12 months? And then also longer term, what are like the 3-5 years plan here, and like then be able to take a step back and like discuss like the bigger vision. So I think you do need from day one to have like some strong hypothesis around like how those things will come together. Obviously the plan for like the next 3 or 6 or 12 months needs to be more detailed than it needs to be for like the 3 or 5 years, but I think you need to like really have like this like kind of flexibility in your narrative that allows you very, very quickly to just like switch gears, So that's, I think, really important. And also when you build your financial model, you want to make sure that you build it with just like having all those assumptions that the investor can also like challenge and play with. So I think investors nowadays are not really like looking at a financial model to like challenge you on that specific number you said you would hit in September 2022, but it's rather about like understanding how you as a founder are thinking about the business, and like the model can be an additional mechanism to just understand like how you think about what you are going to prioritize, etc. And it can be just like additional mechanism to get into interesting conversations about the use of the funding and what you're prioritizing.
That's really nice. I think Carlos uses a great phrase in the book, which is it's financial assumptions, not a financial plan, because you can't predict the future. And I think that's really great. The next question, again, is talked about quite a lot in the book. So, Carlos, this is really perfectly on brand. Is it best to raise before or after building the first version or MVP if you're a technical founder? And you talk about key milestones and not waiting for the perfect feature. So maybe we can talk a little bit about that.
Yeah, so it depends on who you are. We've been lucky to work with some founders that have built some amazing stuff before. And the second time around, they came to us and they said, hey, we want to build this, and we don't have anything yet, but this is what we want to build. You're like, take my money. Why? Because I worked with you. I know that you're going to build it. I know you're going to do well, right? So I think we have to categorize the question a little bit. If it's a technical founder who is well known in the founder community, maybe he's got some open source projects or she's got some excellent projects she's worked on, like, it doesn't really matter if that's something that you can showcase in advance, that might be sufficient. But if it's something that you're doing for the very first time, yeah, the product might need to speak on your behalf. And that's where it's useful to have that. So I think you need to do a self-assessment. It's like, do I have enough of an external reputation that I can leverage that to raise in advance of it? Or do I need to have my product speak for myself?
Great. So we have time for one last question, and we've had about 3 or 4 that have asked about financials. How much should we be raising at seed stage, and is there an upper limit?
So Tom, maybe you can take this. By the way, Anisah, I think we have like 10 minutes. I think we have till 3:10.
Do we?
But 3:10, yeah.
Oh,
so
wow.
we have a little bit of a bonus time there just in case anybody.
Excellent.
It's like the after credits. But yeah, Tom, maybe talk about like seed, the creeping range of seed rounds these days, and when's too much is too much.
No, it's a really good question. I think actually on the biomed stuff is a really interesting point, and I think that I think generally speaking, if we look back, we would have said, pre-seed used to be kind of a very, very small amount, 100,000, 250,000. It kind of crept up maybe from there to there. And now we probably see pre-seed rounds going anywhere from, a couple of 100,000 up to like £1 million, say, as a pre-seed financing round. And then seed, I suppose the question was asking about, it could be anywhere from like 1 up to, you see large seed rounds, which are going to like 3 or to 4, or you see sometimes some headlines, which I think can be a little bit misleading, because I think they can be seen like they are seed rounds, but actually they're bundling a few rounds together when they can be like 10 million or 15 million or some kind of crazy numbers. But I think that in terms of when is it too big, which is the upper bound of investment side, like we've said so many times in this conversation, the question is it does depend. But I think figuring out, to Carlos' point before as well, at what point do you want to, how much money do you need to get to a really, really key next milestone? Because then that key next milestone, obviously, you're going to be able to raise financing again, and you're going to be able to raise financing hopefully at a significantly increased valuation. And you're going to give away an amount of money, and if you're going to give away, an amount of capital in your company at that time that you raise your seed round, unless you can, even if you keep increasing your valuation so that you fix the kind of amount of money, capital that you give away, percentage you give away in your company, the issue that you're going to face is at that next round, you're going to have to show even more in terms of progress to be able to show a very, very healthy uplift for that future financing. And, that's usually like 2 or 3 times probably your valuation of the last one. So in terms of when it gets too big, I think it gets too big when that equation just starts to not make sense for you as a founder, because you are under too much pressure then to raise a massive next round at a huge valuation. And so I think just going into it with your eyes open, figuring out, okay, what's the right amount that I need, maybe building in a bit of buffer. I'd always say to start that number a little bit below, maybe where you would love to get, rather than starting it above, so that you don't qualify people out. You can always raise usually an amount which you raise, increase an amount so you raise, rather than like coming down is a harder thing to do. And then that's probably, about the right amount. And I think in terms of on biomed, that's where it's a little bit different. I think, we're a stage agnostic fund, sector agnostic fund, stage specific fund, but bio and very, very deep kind of like technical solutions like that aren't probably our expertise at all. So I think there are some examples of companies in that space where, some of the things that you spoke about here might not apply as clearly. And maybe some of the funding journey looks a little bit different. But generally speaking, I think, the rest of the stuff which we've spoken about there would sound true.
Amazing.
I think on the too much, there's that whole chapter I mentioned before of toxic rounds. I think you just have to be careful not to get yourself in a situation where it's not just about raising too much money on a too much dilution. It's sometimes raising too much money, not knowing what the impact is on your dilution. Like one of our founders struggled with having multiple convertibles outstanding. And then at the moment of conversion, that became a problem. So it's about figuring out, there's Seeders have some interesting data on this. And one of our other companies, Seed Legals, has a whole section with statistics about how much to raise at what stage and stuff like that. So I encourage people to go to those resources. Anisah, maybe I want to conscious that hop in will kick us out in 7 minutes. So what I wanted to do is maybe just take this last maybe 3 minutes to do a few things. First, I wanted to thank you for your time, because I asked you to tell a little bit more about you, but you've been so kind in asking more about us. But I would love to maybe have a few parting words from you in a second. But I just wanted to thank you for your time. I know that this is not necessarily your day job, and I'm much appreciated that you're willing to not only read it but also ask us about it. And obviously to my colleagues Tom and Sia. Luckily, this has been recorded, so anybody who wants to watch it and stuff, we can share it beyond this. And thanks for the audience for sticking through this. But maybe I'll hand it back to you, Anisah, to share any final points that you might have.
For sure, I would love to. I think one of the things when Seedcamp sent me the book, it was, I have been in this position on both sides of the table, and it's always very much shrouded in mystery, and it's shrouded in confusion as to what are the next steps if you don't have a network. Like, I did not have a network when I started in tech 10 years ago. I sort of rolled in off the train from Nottingham and suddenly was in this thing called the London tech scene. And for me, I'm very passionate about changing access to tech and to capital specifically. And for me, having this as a really great entry point is really useful. That's why I'm very glad to give time to do this. I think it's a fantastic resource. I think another point that Carlos and I talked quite a bit about privately before we got on this call was the diversity of funding and what that kind of looks like in today's world. There are not very many people that look like me on either side of the table. There are not many people who have non-university degrees, who are brown, who are women of color, especially Black women. There are not very many. And what this allows us to do is to open up the doors to people and to say, hey, this isn't maybe as crazy as it seems. You don't need a warm intro to get through the door. You can come to hop in, meet us, tweet us afterwards, and one of us will introduce you to the right people. And I think that's such a great part of this conversation that Seedcamp has put on, is that there are a great bunch of people behind VC. They're not all terrible, as we seem to see from stories left, right, and center. And the European tech scene is really thriving. And then maybe just a final word from me, which is something I wrote down, is team is so valuable when you're fundraising. Like, who are the people around you? And that isn't just your founding team. It's your advisors, it's your lawyers, it's your accountants, it's the people who make sure you don't get screwed, so you're meeting the right people. And I think what Carlos, Tom, and Sia are all saying here is make sure that you ask those questions, because when you get through the door, they're going to be with you for the next 10 to 20 years. And that's crazy. And even once you've left those companies, they will still be with you going forward. And so on that note, I just wanted to thank you all for taking this time to be the beginning of maybe a few people's journeys here. With the book in itself is a lot of people's entry point now. I know the first one was for a lot of people too. So yes, that just a big thank you from me for doing this, for putting your time and effort and energy and intellect into creating a resource that is going to be very helpful to European startup founders.
Thank you. Well, thanks for the kind words. And yeah, hopefully anybody who's watched this, and when you're done watching it, there's plenty of resources to get in touch. Seedcamp, Sifted. Anisah, what's the best way for people to get in touch with you?
Yes, so you can find me on Twitter at AnisahOB. The newsletter is on sifted.eu. Get the Startup Life newsletter. We talk about all this stuff every week, all the stuff that's kind of demystifies the tech scene. And you will find us there.
Excellent. Well, you can find Tom, Sia, and I at Seedcamp. Our individual Twitters are there. The book's fundraising-field-guide.com. And with that, guys, I just wanted to thank you. And hopefully we'll get to meet in person soon. Until next time. Bye.